What's up, guys? Frugal BC. Hey, the prices of everything, including Algorand, are tanking. We are, if not in a bear market, something that looks like a whole lot like it. You're probably wondering, what the heck did I do? Well, we're going to talk that through today because there are some really important things that you need to know about bear markets, and we're just gonna go through that all, talk about Algorand and the price predictions for that, and how you should handle this this downturn. All that on today's Frugal BC. What's up, guys? Frugal BC here. Welcome back to the channel, and we are going to look at, because Algorand around the 40 cents mark right now as I record this. Not great, not a good thing. That we don't like this. It's tough. When the times are good, this stuff is easy. When the times are bad, this is when it gets hard. Yeah, 40, almost 41 cents as I record this right now. Down 34% on the week, and it's not like Algorand's just doing this. It's pretty much everything. It's not just all of crypto either. It's stocks. I mean, everything is down, everything is crashing. And I want to make this video because I think there's some really important things that people need to know. There's some very bad things you can do now, and we want to avoid that. There's a certain mindset around investing, and it's really easy when things are going well. But when things are going badly, that's when you need these principles, and that's when how people don't stick to them. Because actually, this is an opportunity. It doesn't feel like it right now. I guarantee it does not feel like it right now. It is really, really hard to watch your money go down. But these are an opportunity. We're going to talk about that opportunity today, and how you can prepare, how you can help stay the course, and make it through this bear market and actually come out ahead. So before we do that, guys, I'd love it if you hit that like button. It's really important to do that on this video because I want as many people to see this as possible, because I don't want to see people get wrecked here. And so I want to put this out there, and I want it to reach as many people as possible. And if you want to see all our content, go ahead and hit that subscribe button. I always appreciate that. And it's been great to see the channel grow. Normally I'm talking about experiments. That's my goal on the channel. I do these little crypto experiments, and instead of hyping them up and saying, hey, this is the greatest thing ever, it's like, well, hey, let's just try it out, see how it goes, and then we can let you know the good, the bad, and the ugly. Anyway, let's talk about some frameworks for dealing with a bear market, because I don't think I have to argue the point that we're either in a bear market or something that is acting a lot like it. And I think the idea of this huge pump that was supposed to happen, I don't think that's happening anymore. So I'm just going to go through a few principles that I kind of laid out, and made some notes today in thinking about this, and just how to deal with the bear market. It doesn't matter if it's Algorand or if it's Bitcoin or it's stocks. You're gonna go through this over time. Okay. So the first best thing that I can say to you is that you want to stay the course. Now, what do I mean by that? Well, pretty simply, in crypto terms, it would be hodl. But also in crypto terms, this is the time when you do diamond hands, because it's so. See, here's what happens. Everybody knows the maxim: buy low, sell high. Everybody knows that. It seems basic. Everyone thinks, well, wait a minute, that's pretty simple. I should be able to do that, right? That's easy. I can understand that. How come everyone doesn't do that? Well, because everyone doesn't do that. Why don't they? Well, there's a little thing called the fear and greed index. And when fear is high, people don't want to buy. But fear is usually high when things are in the tank, when they're low and they're on sale. When greed is high, it's usually the wrong time. So when everything is at its all-time highs, because people see the price going up and they think, oh, cool, I want to get in on that. They see it going down, they're like, oh man, I got to get out of this. Something I like to say when I was talking stocks with people is I would explain, hey, here, I'll go back to March. Actually, I won't even go to the 2008 crash. I'll go to March. March, the stocks tanked like crazy. I mean, we saw, I remember how big that drop off, 35% drop off. I mean, it was huge. It was a huge dip. And if you looked at your portfolio that day, it's like, it gives you a little kick in the gut. It's not fun. It's not fun at all. And So what did I do? Well, so here's the framework that I'm going to give you. When the market is down, that means stocks and crypto are on sale. So I'm going to repeat that. When the market is down, that means stocks and crypto are on sale. So you're getting a deal. You're paying less money for the same amount of assets. That's a very good thing. We want that. Which, the problem is everyone's fearful. So when you remember the whole Warren Buffett thing, when other people are fearful, you should be greedy. This is what they mean. Right now, this is the fearful time. Again, not as I say in my intro, not financial advice, but this is just my investment strategy that you can learn from. So what did I do during the March 2020 crash? I kept buying. And frankly, I missed that bottom. I bought before the bottom and after the bottom. That's just the way it worked out. I buy every 2 weeks. I put some more money into stocks, and now I've been putting more money into crypto too. And I've been doing that now. I bought Bitcoin at like 30,000. Now it's at 28. I'm probably gonna buy some more in a week or so, and bought some stocks too, putting money in. And you know what happened afterwards? It rebounded up. It rebounded up much higher, and it went on like a two-year run until recently. And my net worth doubled from that time. So yeah, this is what obviously I was putting money in throughout, right? So this is why people talk about dollar cost averaging. I'm throwing a lot of terms out, I understand. The dollar cost averaging just means you keep buying every week no matter what. That's usually a pretty good strategy for most people, because you know what? People are really, really bad at timing. So here's what people think when you get to one of these cliffs. People think, oh, I'll sell out and then I'll get back in. And you know what? No one ever gets back in at the right time, because it usually comes as a surprise, and by the time it's on the way up, people miss it. Unless you're watching the stocks every hour, which you are not, you're going to miss that bottom, and you're probably going to get in at a higher point than when you left. So it's really usually just better, unless you really need the money for something, and you shouldn't. This should be money that you put on the side. It's much, much better to stay the course, to just leave your money in and build on top of it when it's low, when you're getting stocks or crypto on sale. Now, with crypto, because with stocks, I'm usually talking about index funds. So with crypto, I'm mostly talking about the major caps. We're not going to see Bitcoin or Ethereum go anywhere for a while. That's fine. So Algorand, I put that in that category too. I just don't think it's I think it's gonna stick around a while. So I'm not that worried about it like actually disappearing. Now I know you guys are probably following Terra Luna, the saga there, where just a massive like sell-off, massive bank run. And that's a problem unique to like a newer stable coin. So you won't have that same problem necessarily with cryptocurrencies, because they just they don't have that need to maintain a price. Like if people sell off, it'll go down, but it doesn't tank the stock or the crypto in the way that it does with the stable coin, because the stable coin is algorithmically set to try to stay at $1. So if it can't do that, that's a huge problem. So so buy and hold, stay the course is a really important framework to think about. Now, I'll tell you, the first time, this is not easy to do. This is easy to say. It is not easy to do. You have to have the stomach, and this is why most people end up failing, because when push comes to shove, they don't have the stomach. I'll tell you, the first time I invested, I put in like 500 bucks into my Wealthfront account, and it immediately tanked, because guess what happened? Brexit happened like 2 days later, and I had to watch this money I put in just go to like from 500 to like 420 or something like that. And I thought, oh God, what am I doing? Why am I wasting? You just question everything that you think, everything that you're doing, you just question it, because you watch your money go down. What you have to remember is you have the same number of assets. You just have less dollar amount temporarily. It's all temporary, okay? Just like stocks, Bitcoin has gone up over time, and it will continue to go up over time because it's more scarce. I also believe Algorand will do the same thing in a much, much more muted fashion. I think it's generally going to be more stable, so we're not going to see huge price swings up. I think it's just going to be a slow, steady climb. But not right now. Right now, things are down, so basically they're on sale. And then I want to talk about why diversification is important. So here's something that came up. When I was talking about my Lofty investment, people were like, well, why would you do that? Why would you be invested in this thing when, excuse me, why would you be invested in this thing when you can make so much more on these other cryptos? Like, yeah, but you know what? When in a situation like this is exactly why. When there's a market, a bear market like this, I'm still earning steady returns on those investment properties, right? This is why I invested in Lofty. And by the way, if you haven't checked out my videos on them, you should. It's a great platform, and it's a great way to put some money into something where it's stable. Yeah, the returns are small. They're like 8, 9, 10% a year. I mean, small. I don't think that's really small, but it's small in terms of crypto, like DeFi stuff, of course. But I'm getting those right now. I get those today. I'm gonna get those tomorrow and the next day, on and on and on. While crypto market is in the tank, I'm still getting that. So diversification is a good idea. I feel like, I know I'm kind of alone in the crypto space when I say that people should probably also have index funds that are nice and slow and steady. Of course, those are tanking now too, but they'll go back up. But find some way to diversify. Don't put all your stuff into one coin for sure. I mean, think of all the people that had all their money in Terra Luna. Yikes, that's scary. So very important to diversify. And another thing to do is to focus on total coin. This is a strategy that I've been doing where I'll look at not necessarily the dollar amount of my total portfolio. ASA Stats is a great tool, by the way. You want to check that out. You want to Google that, because that's going to give you your total portfolio, and you can measure it in US dollar, and you can measure it in algo. So if you look at the algo, you can see the amount that it's going up. Now, there is some caveats because I have Lofty tokens. Those Lofty tokens stay at $50 no matter what. So they kind of distort my algo market. But overall, you can kind of see how much it's climbing, because what I think you should do is focus on your total coin right now. You know, if you're still getting yield, you're still getting new coin, and those coins might not be worth as much right now, but they will in the future. So just keep doing your yielding, you know, whether it's Yieldly or Tiny Man, Cake DeFi, whatever. I'm in all of those. Algo Fund too, that one's been great. They just added a new one, by the way. That's what you got to think about. Think about total coin. This is a good mindset to keep yourself from getting a little depressed, because like I said, you can have all the frameworks that you want, but if you don't control your emotions around this, it's tough. Another one I'm gonna touch on is kind of the angel investor mindset. So what I think is going to happen if this bear market continues, you're going to see some of the weaker project washed out. That might mean some ASAs. We'll have to see. We haven't had this kind of ecosystem with the bear market, so it's hard to say what will happen, but there's a good chance some of these ASAs will just get, you know, nixed. And so we got to be mindful of that. Here's the angel investor mindset. When angel investor doesn't just invest in like one startup, they invest in like 30 startups or more. And of that set of startups, you know, a good portion of them, probably half or more, are just going to fail. Like they're just going to go nowhere. It'll be total loss. And then you probably get like a few that are, you might call them like base hits, doubles, that kind of stuff. Like they'll do good. They're not gonna blow anyone out of the water. They're not gonna be the next Facebook, but they, you know, be solid companies. They'll have a couple that maybe do a little bit better than that. And then if you're lucky, you'll have one unicorn that's like a Facebook or a Google or a Netflix, yada, yada, yada. So which you should think of your crypto portfolio like that too, because some of the projects, frankly, they're just not going to, they're going to go away regardless of the bear market. The bear market just kind of has a tendency to wash them out. But what you're really looking for is one or two solid unicorns and some base hits too. And we're going to have that. If you got a good solid platform, you know, a good solid portfolio, you're going to have that. So, and then I guess the last thing I want to touch on, this is probably the most important thing, is, and I see, I want to touch on this because I see this in my comments where people just think so short term. Guys, you got to think long term. Absolutely have to think long term. You're not going to get rich tomorrow. It's not going to happen. Okay. You're going to get rich as you build assets over time. You will keep building more and more assets and you will build wealth. Now, it happens faster in crypto than it does in traditional markets. But no matter what, it takes time. So don't think you're going to get rich tomorrow. I see so much, like, whether it be on Reddit or even in my own comments sometimes, but like, is this thing going to go to the moon tomorrow? No, probably not. I mean, maybe, you never know, but most likely, probably not. You know, even Bitcoin, imagine if you had Bitcoin in the beginning and it was worth, you know, where you could have like 3 or 4 of them worth a penny. I mean, you probably didn't, you probably had to sit on that value for a while before finally it went up. And then you had to sit on that for a little while before it went up again. And guess what? You're probably not going to get anything like that kind of growth today. But even Ethereum, look at Ethereum went up to like 1,500, then it dropped back down to 100 some, then a few hundred. It was sitting at a few hundred for a while. Then all of a sudden it popped back up to into the 2,000-3,000 range, and then recently just went back to around the low 2,000s. So you have to think very long term with any kind of investing, but especially. But it definitely applies to crypto too. So you guys want to hold on to this stuff for a long time. If you're not going to hold on to it for a long time, I don't know. I guess you can play around with it if you want, but you can't expect to make any money if you're just going to keep buying and selling it. I've seen that. I've even seen, I talked about how I thought NFTs were the perfect solution for NFTs was in gaming, because, how great would it be if you can own the assets that you pay for? I think that can be decoupled, frankly, from being like a money making scheme. Like it could just be such that it's verified on the blockchain. So when you own it, you could also turn around and sell it, and maybe be worth a little more than what you paid for it. I don't think it has to be necessarily this big get rich scheme that a lot of them try to push for. But someone recently commented on my NFT video which was in response to the documentary about NFTs, and they're like, can't believe you would say that. Look at how Axie Infinity screwed up. I'm like, yeah, you're thinking today. I'm thinking 5 years down the road. I'm thinking 10 years down the road, okay? You guys have to think long term. If you don't think long term, you're not going to be successful in this. And there's no other way to put it. So that's just something, all these frameworks, but especially they're all based on thinking long term. So that's kind of the thing that wraps these all up. All right, guys, I hope this helped today. Like I said, I feel like I need to put these frameworks out there because there's a lot of fear, a lot of people kind of freaking out, and understandable. It's hard. Stuff is emotionally hard. So I want to hear what your thoughts on that. If you use any of these frameworks yourself to help, you got one that I didn't think of, or what are your thoughts in the bear market right now? Let me know in the comment section, and I will see you in the future.